Brad, I'm so glad you're here because you started covering Amazon in 1999, and it was just 2 or 3 steps beyond being just an online bookstore back then. How did we get here?
Well, it's funny because when I first visited Jeff Bezos up in Seattle, Amazon's stock price had fallen into the single digits. Employees were panicking, and he wrote on the whiteboard in his office, "We are not our stock price." And it's something that Amazon employees might remember today because as the chart that you showed demonstrates, I mean, this company has been propelled, yes, by strong fundamentals and increasing net income, but really by a wave of optimism, right? That everything that Amazon is involved in will turn out well. This market capitalization has tripled in just the past few years, and everything's got to go perfectly for Amazon to justify this valuation and to keep growing. So Amazon, it's not its stock price. It is doing quite well, in all of its core businesses. It's transformed its operation into a marketplace and a service that helps other customers, other retailers sell online. But clearly, there's a lot of optimism out there.
Well, and Ivan, let's talk about the reality here. How likely is it that everything will go perfectly, as Brad says?
Well, I don't think they really expect it to go perfectly. It's a company that takes risks. They get into new businesses. They invest in growth. And they're continuing to expand outside their core business by adding different services into their online retail supply chain management system, and also their web host, Amazon Web Services. They're adding big data analytics. They're adding AI capabilities. So they keep expanding what they do. And I think the next big area that Amazon goes into is going to be focusing on healthcare.
So, look, Brad, I'm looking at the chart from 1999. And looking at the speed of which shares have risen over the last 3 years, is this rational?
Well, the kind of market decides that. Clearly, yes, it is. These are all rational actors who are buying and holding Amazon stock. This is a company that has executed extraordinarily well over the past, 10 years. The acceleration and loyalty towards Amazon via Amazon Prime, the increasing success of fulfillment by Amazon, where Amazon turns its warehouses over to third parties. All the things it does so well. And online retail is still 5% of total retail in the U.S. It's much smaller in other markets. So I think some of the optimism is investors rationally looking and seeing that Amazon is an extraordinarily well-run company in markets that have so much room for growth.
So PetroChina briefly crossed the $1 trillion mark in late 2007. Oil prices then crashed. Ivan, do you see some big, potential challenge or headwinds out there that could lead to some downside risk here?
Well, there could be, with the recent run-up and the long-term run-up, there could be some profit taking, and there is a lot of value in a number of other leading tech stocks, specifically Google. I think that Google is a tremendous value here. It has not increased and doesn't trade at the valuation that Amazon does, yet it has a lot of the key business drivers similar to Amazon. So also Microsoft is, again, close to the $1 trillion mark too. It's a little bit ahead of Google. Microsoft is evolving into a leading cloud play as well. So I think you could have some profit taking in Amazon and people reallocating the money into other stocks that also have potential to go across the $1 trillion, or at least increase in value as well.
Brad, what about the threat of regulation? Is that the biggest threat here?
Right. We talk about this $1 trillion mark when really it's a subjective number. Amazon's not different than it was yesterday, than it is going to be perhaps tomorrow. But it is important in one context, which is that it puts an incredibly visible target on the backs of these companies, right? There's no better illustration that they dominate our landscape. And I think, look, Amazon's seeing it from the right with Trump and his tweets about taxes and the post office, and of course, Jeff's ownership of the Washington Post. And on the left from Bernie Sanders and about wage growth and public assistance in Amazon's fulfillment centers. I think there's a big conversation about whether Amazon's commitment to low prices is having an impact on some macroeconomic indicators like inflation. And look, I think that, Amazon's the biggest target around. So I do think that regulation is one of their biggest challenges and potentially obstacles in the years ahead.
That said, Ivan, the venture capitalist Chamath Palihapitiya thinks Amazon will be the first company to hit the $3 trillion mark. I know it's hard to look that far ahead, but what do you think of that prediction?
Well, I think the stock still has further potential for a number of reasons. It is, along with Apple, the dominant stocks in the S&P 500. So as money continues to go into the market, passive investors have to, they're both close to 4% each of the S&P 500. So 4 cents out of every dollar going into an index, S&P index fund goes into Amazon, into Apple. And with the rise in the market, it's going to attract more money. So I think it continues to trade up on that basis. Second is they are a very fast growing company, and they continue to evolve into new businesses and develop new markets and go after markets that are fast growing, that they can bring their operating efficiencies to. And I think that they are going to continue to do that, which will drive more growth. So I think there is further upside in the stock. So $3 trillion is probably a ways away, but at some point when the market rises significantly, Amazon is going to continue to rise significantly as well.
3T, Brad?
You know, it seems excessive, but $1 trillion in 2018 would have surprised me also. And look, Amazon makes a lot of bets, plants a lot of seeds. You know, Alexa is one of them. It's a new computing platform, and it's kind of leading this voice market. If they bring that into cars and into the enterprise, into the workplace, then yeah, I see a lot of different opportunities for Amazon.